Gold looked unstoppable this morning. Then, within hours, it gave back a chunk of its gains, and traders are asking why. As of Monday, the 27th of July, 2026, gold firmed early in the session on the back of falling oil prices, only to trim those gains as the US dollar clawed its way back and crude oil found its own footing. This is exactly the kind of tug-of-war that defines gold trading right now: safe haven demand pulling it one way, a strengthening dollar pulling it the other. And looming over all of it is the Federal Reserve, whose next interest rate decision could decide which side wins. If you've been watching gold charts today and wondering why the move looks choppy rather than one-directional, this is the story behind it. The biggest driver of today's moves is oil. Prices have slipped after news of a temporary pause in tensions between the United States and Iran, easing fears that supply from the Middle East could be disrupted. Lower oil prices matter far beyond the petrol pump. They reduce inflationary pressure, which in turn changes how central banks think about interest rates. Less inflation risk from energy costs gives the Federal Reserve more room to consider cutting rates rather than holding them higher for longer. That's precisely why gold firmed initially this morning. Falling oil, cooling inflation expectations and rising hopes of Fed rate cuts are all classic ingredients for a stronger gold price, since gold pays no interest and becomes more attractive when rates fall. But the dollar didn't stay down for long. As geopolitical risk eased and attention turned squarely to this week's Fed decision, the US dollar found renewed support. The euro, which had been gaining, is now trimming those gains as traders price in the idea that the Fed's tone this week could keep US rates relatively attractive compared with the eurozone. A stronger dollar makes gold more expensive for buyers using other currencies, which naturally caps gold's upside. It's a direct mechanical relationship: dollar up, gold under pressure, all else being equal. This rebound is the main reason gold's rally stalled out despite oil continuing to soften through the session. Zooming into the charts, analysts covering the weekly technical outlook are flagging gold alongside US dollar to Japanese yen and pound sterling to US dollar as the pairs to watch heading into the Fed decision. Gold remains in a broadly firm posture on the weekly timeframe, but today's intraday reversal shows sellers stepping in once the dollar found its floor. For traders, that means watching whether gold can hold above recent support levels or whether a stronger dollar drags it into a deeper pullback. US dollar to Japanese yen and pound sterling to US dollar are also sensitive to the same Fed narrative, since any shift in expected US interest rates ripples straight through to how the yen and pound are priced against the dollar. It's not just gold and the euro feeling the effects of today's oil move. The Australian and New Zealand dollars have climbed as the oil price slide eases concerns about imported inflation in both economies. Lower energy costs reduce pressure on the Reserve Bank of Australia and the Reserve Bank of New Zealand to keep rates elevated, which is generally supportive for risk-sensitive currencies like the Aussie and Kiwi. This shows just how interconnected today's market moves are. A pause in US-Iran tensions is touching everything from gold in London to interest rate expectations in Wellington and Canberra. For everyday investors and traders, today's session is a reminder that gold rarely moves in a straight line, especially in the days before a major Fed decision. Anyone holding gold as a hedge is seeing a smaller cushion today than they had this morning, while dollar-based traders are seeing renewed strength across major pairs. Portfolio managers watching energy-linked inflation trades are recalibrating too, since a sustained oil price pause changes the inflation outlook that's been baked into bond yields and rate expectations for months. In short, volatility is up, and every headline out of the Fed or the Middle East is being read closely for clues on the next move. Looking ahead, the Federal Reserve's decision is now the dominant event on the calendar. If the Fed signals openness to rate cuts, expect the dollar to soften again and gold to regain its footing, particularly if oil prices stay muted on the back of the US-Iran pause holding firm. If the Fed instead strikes a more cautious, higher-for-longer tone, the dollar rebound seen today could extend, keeping gold capped and adding further pressure on the euro. Much also depends on whether the US-Iran pause proves durable. Any sign of renewed tension in the Middle East could send oil and gold sharply higher again within a single trading session, so this remains a genuinely fluid situation heading into the Fed announcement. so here's the bottom line. Gold firmed early today on falling oil prices tied to a temporary US-Iran pause, but trimmed those gains as the US dollar and oil both rebounded, with the euro giving back ground in the process. The Australian and New Zealand dollars climbed on the same oil-driven easing in inflation concerns. But the real story this week isn't oil or geopolitics alone, it's the Federal Reserve. Whatever the Fed decides next will likely determine whether gold's dip today was a brief pause in an ongoing rally, or the start of a deeper correction. Keep watching those Fed headlines, because in this market, they're moving everything from gold to the Aussie dollar in real time.